So my parents exposed me to like finance and the power of personal finances at a really young age. If I wanted to borrow $10 to go to the movie theater, I had to pay it back, pay the $10 back plus interest. And not many 10-year-olds know what interest is, but I was that person.
Hey everyone, Jessica from Uprise here. Really happy to have Lauren Messner from Better Tomorrow Ventures here on our channel. Lauren, thanks so much for joining us here.
Thank you so much for having me. Really excited to be on.
Awesome. Yeah. So likewise, because Lauren is an incredible investor, as well as fintech guru, as well as self-proclaimed fintech nerd or finance nerd. And so I thought, you'd be perfect to have on our channel and talk through your story, especially because venture is such a dream career, I think, for so many people, talking through the ups and downs behind that, as well as, your journey with personal finances. That we could cover all of those today.
Yeah, sounds great.
Awesome. Cool. So let's start off with career stuff. You graduated from USC in 2020. Can you talk a little bit about, just basics? What did you major in? What did you think about? How did your sort of thinking about career evolve during your time at school?
Yeah, that's a great question. So ultimately, I did major in economics and minored in finance. It was a little bit of a whirlwind getting there. I actually started as a fine arts major. Didn't really know what I wanted to do with my life. Had a really strong photography portfolio in high school. And personally, I knew that I wanted to get into business at in some way, shape, or form. And I thought creativity is really important and being a good businessman or businesswoman. So definitely thought that photography and fine art would be at least a great place for me to grow my creative side while I also dabbled with other things to figure out what I wanted to do. I come from a long line of finance people in my family, so I kept getting drawn to finance. And then finally I gave into it and was like, you know what? I absolutely love finance. And not many people do. And I don't know, I just loved just the financial world and thought that economics would do a really good job of teaching the quantitative side that I was kind of lacking. And then the minor in finance kind of helped hone in those financial quantitative skills.
Gotcha. How on the fine arts piece, that is so unique, I guess, in terms of, most of the people we talk to here. When did you realize, hey, that you weren't going to, continue on with it or pursue that as a major?
Probably my first week of freshman year.
Gotcha.
But it was a very quick switch of, I don't think this is right for me. So I'm going to start taking some psychology classes, some finance classes. And USC gave me that flexibility, which is really nice.
That's great. And that's like what college is for. So that's awesome that you got to that. So what about this process of getting into venture?
Yeah, for sure. So as for first getting involved with venture, I was really I was lucky. I was in the right place at the right time with the right people. I was actually catching up with an acquaintance my sophomore year at USC, and naturally as sophomores, we were talking about internships, career goals, what we were studying. And I knew that I was really interested in entrepreneurship and wanted to get into the tech world. But I didn't really know that venture capital existed, even as the finance nerd. And she just so happened to be starting a venture capital student org, whatever that meant, and encouraged me to join. So when I joined, it was a 10 to 15 person organization where we met weekly to just talk about the startup ecosystem. So think fantasy football, but tech edition, where we would talk about, if we had $10 million, where would we deploy that capital? One night we were talking about the USC ecosystem in particular, and it dawned on us that USC didn't have an investment vehicle to support Trojan startups. which we thought it was absolutely ridiculous given how big USC's endowment is and how many like startup founders come out of USC. So that's kind of what got us to set out to start the USC Venture Fund. It definitely wasn't easy and took a lot of people taking like pretty big bets on us. But a semester later, we had a like real venture fund running as a USC like university course where we were able to deploy like $50,000 like they were more so grants rather than like actual venture capital, but we could actually start supporting USC founders with real money, which is really fun.
Oh, that's awesome. I mean, you make it sound so easy. It was like you guys had the idea and then boom, cutting checks to people. Like how did you like actually make that happen in terms of, I imagine there's different stakeholders in order to make that happen. Like, how did you guys push through that?
Yeah, it was hard. And like, luckily we had a team of people who like were really good at navigating, and I definitely can't take credit for that. But a lot of it was meeting with university faculty to see if we could find a university like faculty member who would sponsor the class or like kind of serve as the professor of the class. We also had to figure out how to raise the money. So a lot of that was talking to some USC alumni who were really passionate about startups and were willing to donate rather than being an LP and getting to see the upside. So definitely was very like appreciative of those people who just really love to support like the startup ecosystem. And then it also took kind of getting the university on board because their name had to be on it. So we ultimately got them comfortable with having an investment committee serve as the decision makers. And these are comprised of like different venture capitalists in either the San Francisco area, the LA area, some in New York. So they would meet, I'd say like once or twice a semester to serve as the decision makers once the analysts or the students presented like what we thought would be a good startup to invest in.
Okay, so you didn't immediately join BTV after school. I think you took another role first and then moved over to BTV. Like, what was your journey sort of like figuring out, landing that first job post college, and then making your way to venture after that?
Yeah. Part of that was, I love to network. So I would hop on the phone with as many people as I could who are working in venture to see how they got into venture. And it sounded like there were, I guess, two different routes into getting into venture. One was from a traditional finance route. So whether that be investment banking or commercial banking, private equity, really just working in traditional finance and then moving into venture. And then there was the operator route. So either starting a company or working at a high growth startup. And based on my conversations also with finance people that I was really close with, it sounded like working at a startup was going to be way too risky, and that traditional finance gives you a really solid foundation that can be transferable to many different things, including venture capital. So decided that taking the traditional finance route was going to be like my route. And I have so many thoughts around that we can get into later. But decided to do an internship my junior year at USC at Wells Fargo. Absolutely loved the team I was working with. So it was kind of a no-brainer when they extended the full-time offer. After graduating, spent 8-ish months at Wells Fargo, did like the analyst program, which was like 6 months of training just because it's 3 different groups you need to learn how to underwrite to. I, again, loved the people I was working with. It just was not the place for me. Wasn't really into the 9 to 5, really wanted something that was moving faster and where like I could see a lot of my work through. I felt that at Wells, I got a really good foundational experience, but I was also seeing all the pain points in the traditional finance or in the incumbent bank space in particular. And that's where I fell in love with Fintech because I was seeing all these companies trying to like take on what not just Wells Fargo, but what JPM and Goldman Sachs were kind of failing to implement. And I loved that they were trying to not only like change the financial services like infrastructure, but they were also trying to build the next generation of financial products. So that's where I started subscribing to every single fintech newsletter probably on this planet. And timing wise, this is when BTV had first announced Fund One. So I kept seeing BTV mentioned over and over and over again. So it became pretty apparent that this was the fund to work for. So I cold emailed Jake and Sheil, the two partners of BTV, and told them, I want to work for you. I don't care what the role is. It can be an analyst, chief of staff, partner. I don't care. I just want the role. I want to work for you guys. And I guess like the entire like recruiting process took about a month. They weren't really looking for anybody. So I think that they were trying to figure out like where to put me, but joined in February and have been there since and absolutely loving it.
Amazing that it's so much like in previous conversations we've had on this channel. It's there's a term that came up which is called like forced serendipity, and like so much of this story that you've described is like it is serendipitous in a way, and at the same time it's like, you know, like you really have to like go out there and put yourself out there too to make that happen. I'm curious, you mentioned like so many thoughts on joining traditional finance after school. Yeah, what are those thoughts?
I guess there's a stigma around joining a startup, that joining a startup is super risky. And if the startup fails, then your career is going to fail. And that's just so far from the truth. Because if you join a startup, like, yeah, you might be just joining like the marketing team, but you're also going to be working like across the entire business. So you're not just going to be learning marketing. And those skills that you learn at working at a startup can be transferred to, again, really anything. And I would argue more so than traditional finance. I felt when I was at USC, everyone was told that you need to go into banking or you need to work at some big corporation. And then later in your life, that's when you can join something a little more risky, which is like kind of silly if you think about it, because the best time to take risks is when you're young and don't really have other commitments. I don't have a family that I need to provide for. So like it really would make the most sense for me right now in my life to take those really big risky bets. And I mean, I personally don't think working at a startup is that big of a risk or that big of a risky bet. I think it's actually less risky than joining a big company where you're not going to be able to really differentiate yourself. So I don't know why universities don't encourage their students to either start a company or join a startup. I really wish that that's something that I was told, and also told that it wasn't as risky as what they make it seem to be.
100% agree. Having worked in a ton of startups, you just get so much more experience. It's like multiple jobs, but like packed into the same experience all at once. And like, when else do you need that kind of breadth? Yeah.
Oh, totally. It's funny because a lot of my parents' friends have kids who are in college right now. And I think that they thought by introducing their kids to me that I was going to say like, oh, join like a traditional bank, like do the banking route. And then meanwhile, the actual conversation was, oh my God, drop out of school right now, start a company. It's not as risky as people make it seem. So I think that some of them are regretting having their kids talk to me, but others are actually starting their own companies and their parents are encouraging it, which is really exciting for me to see because I get to see the next generation of entrepreneurs coming up.
Yeah, no, that's awesome. Cool. So maybe talk a little bit about fintech. You know, like fintech right now is super, super hot. I was like reading a bunch of like articles, like $54 billion went into fintech from VC money in the first half of this year. But your thoughts on, you know, where fintech is going to go, and maybe if even some of that is justified.
Yeah. So I definitely think it's justified. And yeah, fintech is a really hot space right now. And unfortunately, from like the VC's standpoint, it's getting really expensive too. But I think that it's actually like a really great thing that we're seeing so much money going into fintech, because I really hope that it's incentivizing talented founders to start building in the space and to keep building in the space. As for like why like I'm so excited about fintech, I personally feel that like traditional financial services and institutions have like moved away from offering services and like products that allow consumers to like achieve financial freedom, like what the financial products were originally designed to do. And I think one of the biggest drivers of inequality is financial literacy and accessibility. And fintech is definitely working toward closing that gap through re-democratizing financial tools. And like fintech is just a general space. I think the term fintech today is kind of similar to what like the term like an internet investor looked like back in the 90s. Like nowadays you don't have internet investors because I mean everyone's an internet investor. You have like now different verticals. So within fintech, I think there are going to be a million verticals that are going to come out of it. You're already seeing a bunch right now, whether it be like just banking as a service or banking products to investing products. So it's going to be really exciting to see how fintech transforms just, I guess, in the next few years.
Yeah. Any of those verticals that you're particularly excited about?
Yes and no. I'm still figuring out exactly what my niche is going to be within fintech. I'm really excited about any financial products that are targeting Gen Z, mostly because Gen Z's attitude toward finances is just absolutely fascinating. Like, how do you sell credit products to a generation that's completely adverse to credit, doesn't want to touch debt in any way, shape, or form? So, what are those financial tools and products going to look like for that generation? And then Gen Z is also very like social, talks about everything. So nobody's very secretive about how much student debt they took on or like what they're investing in. So it's also very social. So it's going to be cool to see that. And then I'm also really excited about the DeFi space or decentralized finance space. I joke with my friends that I got crypto pilled and now I've gotten like way too deep and can't escape. But with DeFi, you're going to see a lot of like products that kind of failed in the last 10 years just because the infrastructure wasn't there. And now DeFi is going to like open the door to like a whole new world of financial services.
Okay, so to wrap up the career stuff, I'd love to actually, one of the things that we really like to do here is talk a bit about failure, which I know is always tough, but like it's the place where we all learn the most. So was there a time in your career so far where you felt like you failed, and where did you go from there? Any sort of insights for people on that?
Yeah. I think it kind of goes back to the point about like taking risks early in your career. I don't know if it's fully a failure, but I feel like I didn't really fully bet on myself as I was graduating from USC. I felt that traditional finance was the safest route, even though like I could have started a company or I could have joined a company, but I was too afraid that I wasn't going to be good at it. I wasn't going to know what I was doing, that I would fail, and just wasn't willing to take the risk and take the bet on myself. So I guess part of that is like, building the confidence and like having enough conviction in what you do and like what like you can accomplish. And if I could go back, like I totally would have changed it. I totally would have either started something or worked with an amazing founder who was starting something. And I mean, everyone has like their own like unique path. And I am really grateful for like all the people I met and everything I learned at Wells Fargo. But I do kick myself pretty frequently for not taking like the bet on myself.
What could you have done? I love the piece about confidence. What could you have done to have built more confidence in yourself while still in school?
Oh, that's a hard question. I mean, even to this day, I'm building my confidence. I think a lot of people struggle with imposter syndrome. I'm definitely one of them. But I guess one thing is just like taking those risks. You can't build confidence if you're like kind of taking the easy way out for everything. So putting yourself in a lot of uncomfortable situations. Definitely wish I did that. Definitely wish that I pushed myself kind of out of my comfort zone because that definitely would have helped with the confidence.
Yeah. When you see that of what you're actually capable of, for
Yeah,
sure. Yeah,
definitely.
cool. Okay, so switching gears a little bit, talking about personal finances, and I love, by the way, how into this stuff you are. So maybe talk a little bit about how you got interested in, personal finances as separate from sort of fintech and this kind of stuff.
Yeah. Um, I grew up in a weird family dynamic around like personal finances. Like I was the kindergartner who, like when my teacher asked what I wanted to be when I grew up, instead of the astronaut or the doctor that all of my classmates wanted to be, I wanted to be a stockbroker, just like my dad. So my parents exposed me to like finance and the power of personal finances at a really young age. If I wanted to borrow $10 to go to the movie theater, I had to pay it back, pay the $10 back plus interest. And not many 10-year-olds know what interest is, but I was that person. So that stuck with me like really throughout my entire life. So when I kind of got into college and was surrounded by friends who had no idea what they were doing finance wise, I kind of volunteered myself to be their like financial Sherpa, where like I would introduce like what the stock market is and stocks versus bonds, what a retirement account looks like, the pros and cons of different types of retirement accounts. So I just kind of fell in love with it and loved teaching other people about it because what's the fun in being rich if you can't be rich with friends? So I guess like my goal is to kind of have all of my friends like building their wealth as I also build my own wealth. So then hopefully we can all take amazing trips together and be able to retire at the age of 30. Isn't
Uh,
that the dream?
yeah. So what do your personal finances look like now? How have you allocated your portfolio? Can you talk a little bit about that?
Yeah. So lately my portfolio has definitely shifted in the past like 2 weeks as for allocation. And that's mostly because I feel like I was crypto pilled and just had to go deep. Um, so I would say about, at least from the investment perspective, 50-ish% is now in crypto and 50% is in stocks, bonds, mutual funds, like kind of a scatter between like risk free, not fully risk free, but like less risky and then super risky. I would say the crypto is definitely the most risky, and I would tell everyone to proceed with caution and only put in as much as you're willing to lose and to do your own research because that's the easiest way to lose money. The reason why I kind of invest the way that I do, um, I kind of just look at everything from a very basic fundamental perspective of do I like this company? Do I believe in the technology? And do I believe in the future of it? So that means that my stock portfolio, a lot of it's also very ESG focused because I think that at least the technology and like the positive impact a company with a high ESG rating is means that it will also convert to be a good investment. And then on the crypto side, that's more the technology that excites me. I believe in the technology and I think that's here to stay. And even though there's going to be a lot of volatility from now until 10 years from now, I'm ultimately excited about the very foundational level of the technology itself. Um, so that's kind of just how I go about my investments. I don't try to day trade. I'm not good at it, and I'm not going to try to pretend like I am. I have friends who are really good at day trading and will like buy and sell something in a matter of 2 hours. That's just not me. And I don't know, in the future, I would like to expand to real estate, but I don't have the capital for that yet. So that's a goal definitely in the next like 10-ish years. And you guys definitely helped me with planning how to get there.
Um, cool. So last tip here as well. Any sort of failures or things that you wish you knew earlier about personal finances?
Um, Not to watch your finances on a daily basis, or not just finances, but more so investments. There was definitely like a period of time in college where I should have been studying, but instead I was watching my stock portfolio every second because this is when like there was like some sort of like not full market crash, but like there was definitely like it was definitely like signaling a bear market, and I was freaking out because I saw like one day it was down 10%, another day it's down 8, another day it's down 5, and it kept staying in the red, and I was freaking out. And like in hindsight, I wasted a lot of time and energy and did not get enough sleep because I was so worried about how my finances were doing. So one thing would be to take a step back, especially if you're a long-term investor like myself, and realize that these little bumps in the road are just that, and that there's a very long time ahead of you, and to use that to your advantage and just let it sit. Leave it alone. Don't try to make any rash decisions.
Yeah, that's amazing, and actually probably also really hard to do. It's such an emotional. It's almost like a psychological thing rather than a numbers thing, right?
Oh yeah, I had to delete quite a few like apps on my phone just so I would stop looking, because I like would try to decrease the screen time that my phone would allow me to use, and then I would override it by putting in my passcode or whatever they say, in order to like override that decision. So then I ultimately deleted the apps and was like, you know what? I don't have any self-control, so I'm going to force it on myself.
Gotcha. Very cool. You're the first person I've heard who's done that with financial apps. That's amazing.
Yeah, some people delete TikTok. I delete
Yeah.
Public.
Right. Awesome. Okay. And then last section, I was hoping we could talk a little bit about your experience with Uprise. Yeah, like, thanks so much for, for being one of our early beta customers. So yeah, would love to hear your experience with the product. Like, why'd you initially sign up, and what problem were you hoping that, we could solve for you?
Yeah. I signed up mostly because like I felt like even though I have a like pretty good like view of my finances, it's always great to have like I guess a second set of eyes to tell you like where you're kind of going wrong, or like where you could really optimize. So like having that personalization was like definitely like really enticing. And I guess like I mean there's so much that I learned just from like what you guys kind of like showed my like entire I guess optimization like strategies. Like credit card was definitely one of them. I did not realize like that the card I was using was definitely not the best for where all my like money is kind of spent. Definitely spent way too much on food and like groceries. So it was nice to see that there's a credit card that can kind of help me out with that, with optimizing rewards on that side. The other thing, and I kind of mentioned earlier that I want to one day invest in real estate. I think all of us would like to own a home one day. And I was able to see how much I need to put aside kind of monthly in order to be able to like one day either like own a home or an investment property, given certain like parameters, I guess, and assumptions. So it was really great to see how much I need to start saving, and then also how I needed to kind of adjust my investment portfolio to be a little bit riskier in order to get that upside, hopefully. So then I will be able to invest in real estate, whether it be in 5 years from now, 10 years, 15, who knows, but it was really great to be able to see like the full breakdown on how much I need to start saving now in order to be able to make that purchase in X amount of years from now.
Gotcha. Awesome. That's great to hear. And if someone were to ask you, why should I sign up for Uprise? What would you tell them?
It's a loaded question. There's so many reasons. I would say the main thing is to have like personalized financial or personalized financial advice without paying the price of like a Morgan Stanley financial advisor. Like
Cool.
being able to see like what investments you should make, or like I guess like how to optimize like your like financial stack. Like that's something really unique that not many people have access to, because right now getting financial advice and like recommendations is really expensive or not personalized at all. So it was nice having like the two kind of combined, and I would say for anyone who like wants that, Uprise is a very easy solution.
Cool. That's all I had on my side. Thank you so much, Lauren, for taking the time to do this interview. But really, really appreciate having you here and all of your candor and amazing stories on this.
Oh, thank you so much for having me. I really appreciate it.